We want Tesla to scale its units because each one of them now represents the potential for a robotaxi and a robotaxi fleet. Well, the price target for our stock, and I think it's just hitting now, for 2027, because we do have a 5-year investment time horizon, is our expected value is roughly $2,000, and that's within a range of $1,400 to $2,500, our bear and bull case. Now, just Morgan, on the regulatory side, I actually think regulations are working in Tesla's favor.
Since each unit now symbolizes the possibility for a robotaxi in a fleet of robotaxis, we want Tesla to grow its units. The price objective for our stock, which I believe is right now, is for 2027. Since we have a 5-year investment horizon, our projected value is about $2,000.00, which falls between our bear and bull case ranges of $1,400.00 and $2,500.00. As for Morgan, I genuinely believe that rules are favoring Tesla on the regulatory front. After declining to the low 30,000 area annually for, I believe, around 30 years, the number of car deaths in the United States has increased to over 45,000 in the last 5 years. And I believe that the National Highway and Transportation Safety Administration is under pressure to make a change. Yes, it is closely examining Tesla's data. Additionally, Tesla presented certain statistics on Investor Day that, in our opinion, not many people paid enough attention to. That being said, the most significant is that a Tesla with full self-driving experiences an accident per 3.2 million miles compared to one every 500,000 miles for the typical car on the road. We believe that the robotaxi potential is one of the most significant investment possibilities of our lives and will generate between $8.00 and $10 trillion in income globally by 2030. Actually, from a margin perspective, the robotaxi fleet or the robotaxi service will resemble a software as a service SaaS company because units now have so much choice value. We believe it's quite wise to maximize them. And I believe that saving lives is one of the reasons behind that. Human mistake is responsible for 80% to 90% of car fatalities and accidents. And we think that autonomous driving would eliminate human error. There's more to Tesla's remarkable success than merely watching from the sidelines. Seeking Alpha is your one-stop shop for the most recent information on Tesla, Elon Musk, Tesla innovation, and stock price projections for bulls and those with an eye for finding the next big thing in the stock market. Our channel may get a commission if a customer makes a purchase after clicking on the affiliate links in the description. We just released a report that included our long-term prognosis once more, and the figures have significantly increased. And yet, we believe its worth is really low. And the reason for that is because in the past 2 reports, 2 assumptions have been modified. First, in our previous model, we projected that Tesla would lose 1/3 of its market share. When the Tesla killers entered the market, it lost its 17% worldwide market share in 2018, including China. Additionally, they are not lowering the cost curve for consumer devices, as Tesla chose to achieve in the battery industry. They were ridiculed by others, saying things like, oh, you're putting cell phone batteries at the bottom of the car, cell phone batteries that blow up. Instead, they opted for lithium-ion pouches, which are far more expensive than the batteries used in Tesla consumer products. They will thus have to sell every electric car at a loss and lose business from internal combustion engines if they wish to compete with Tesla. This will occur because, for the first time, the cost of an electric car will fall below that of a gas-powered vehicle in like-for-like categories during the next 18 months to 2 years. And since we're riding the battery cost curve decline, it will keep going down. According to GM's and other traditional automakers' R&D budgets, 10% of their R&D and around $25 billion, 0 cents in capital expenditures are devoted to electric vehicles. Considering what's going to happen, they need to be at almost 100% right now. Furthermore, I believe that Berlin, Germany requested Tesla to construct a plant that would be 200 football fields in size, either soccer or football, because they are aware of their predicament. They need to adapt. Now, of course, Tesla has 3 more advantages, batteries than one. The second is that they have an AI chip of their own. After reviewing the chip specifications, our expert James Wang, who spent 8 years at the artificial intelligence startup NVIDIA, remarked, "Oh my gosh, they're 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. And since we're moving toward electric vehicles, that's crucial. Furthermore, autonomous is a project including artificial intelligence, correct?
Yeah.
The Victor, of course, will have the most high quality data. As of right now, Tesla has 14 billion miles of historical driving data. Oh, and Waymo, the nearest rival, has 20 million. Finally, the only car manufacturer that still distributes over-the-air software upgrades to alter performance is Tesla. First, they are expanding the market for electric vehicles. Global sales of electric vehicles are expected to reach 23 to 26 million units, up from 1.3 million the previous year. That's a 20-fold rise then. We are discussing exponential expansion. However, that is not Tesla's main story. Autonomous taxi platforms are the major news. We're switching to a transportation as a service strategy from a hardware-focused, low gross margin, 125 to 30%. Since they will control the platform that these fleet operators will be using, they will receive a portion of each ride. Additionally, that firm has a gross margin of about 80%. The great thing about concentrating on disruptive innovation and exponential growth is that if we are correct on these 5 innovation platforms, which we believe each represent multi-trillion-dollar opportunities, we should be able to grow exponentially. That's why we recently did a podcast with Elon nearly 2 weeks ago. That's deep learning, energy storage, robots, blockchain technology, and DNA sequencing. In the base case, it is around $7,000 at the end of 2024 because it is a 5-year objective. And we have, by weighing the odds of 10 distinct eventualities, including bankruptcy, we have arrived at that price. Therefore, we've been making an effort to be as impartial and equitable as we can. However, we have a high degree of confidence that this stock will reach about $7,000. Our predicted price goal has increased due to 3 factors. First, we anticipated that Tesla's market share would decline from 17% worldwide, including China, to a lower level when Tesla killers joined the market last year. Rather, it increased to 18%. Autonomous taxi networks are an essentially software as a service potential with a very high margin and recurring revenue. Additionally, you have mostly baked low margin gross margins, more along the lines of auto, 30% range into the cake from the street. Because of their battery technology, we truly believe that the EV's gross margins might reach 40%. The additional income from autonomous would then be in the order of 80% plus life. We believe that this is what people are missing from our $7.00 goal. In the scenario testing, we assume that there is only a 25% possibility that autonomous systems will be operational in 2 to 3 years. Therefore, in 5 years, again, that's not how we really work. We're simply attempting to determine the cash flows and then discounting them. However, one of the things I want to emphasize is that Tesla is riding the confluence of 3 significant innovation platforms, which is why this is going to be such a large upside surprise. Analyzing convergence in the conventional world is rather challenging. Subsidies are never part of our models. We are now discussing whether Tesla is prepared for prime time as an AV and EV company. However, are you aware of anyone else who is as optimistic about Tesla? That would be Seeking Alpha, today's sponsor. The greatest online source of pro-Tesla news is Seeking Alpha. To learn about the most recent Tesla offering, pricing goals, innovation, and all Elon Musk has to offer, click the affiliate link in the paragraph below. We predict that 37 million EVs will be sold in 2024. That amounts to almost 1/3 of all car purchases. Therefore, there are 4 obstacles to entry for Tesla if it keeps its market share. However, I believe the percentage of EVs is a more pertinent number, and I believe that a lot more people are starting to value them today because their battery is so much less expensive than those of other automakers. Those other automakers will have to sell their electric cars at a loss or at a higher price if they wish to beat the competition. Due to the loss of their internal combustion engine business, Tesla will have to sell at a loss. That's one moat then. Their artificial intelligence chip comes in second. They're neglecting a lot of reality, in my opinion. We've discussed the battery as a moat, the AI chip as a moat, and the miles they've accumulated, actual miles that will power the AI engine, their total distance is 14 billion miles. Google has 10 million miles. Furthermore, the only automaker capable of altering performance through over-the-air software changes is Tesla.